Morning traders, I'm Greg McKenna. Welcome to your post-FOMC look at markets morning. Really interesting hour right after the Fed statement and then Jerome Powell's press conference. The statement, I thought, heck, I've been wrong. It's a dovish statement. They've taken out accommodative. They haven't said anything about neutral. They haven't said anything about rates needing to continue to rise. And that was the read that markets took. Euro got up to 117.97. The Aussie was trading 73.14. Dollar Sing collapsed, like material collapse for Dollar Sing in Dollar Sing terms. Everything else was moving around. Stock shot higher. You know, there was a real sense that Jerome Powell and the Fed had given us a bum steer, if I could put it that way, or that Lael Brainard had, Charlie Evans and those kind of people had. But then when the press conference started, it was a really different kind of outlook from Powell. He really dismissed the moving away from or the taking out of the accommodative language. What he said was, well, what do you expect? Effectively, I'm paraphrasing, what do you expect? We've been raising rates for ages. We left that in so that we didn't spook business or consumers. Now that everyone knows what's going on, we've ditched it. And so that was the start of a reversal of the US dollar resurgence. So we've got Euro now 117.45, not particularly weak day on day, but against the high, very weak. The price action tells the story here, folks. Have a look at your charts and just have a sense of what happened. Stocks, the S&P was up at 29.31 at one point, closed at 29.05. Bonds have stayed lower though, 3.05 for the 10-year, so it's managed to hold below that 3.12, 3.15. The Aussie's back at 72.59. It's been a little bit lower. It's now a false break of that multi-touch trend line from 81 cents, so that puts the downside bias there. There's some things about the Aussie, we'll talk about that in a sec. Dollar CAD's getting belted, CAD's getting belted. Dollar CAD is up because of NAFTA. Looks like the Americans, or at least the White House, is going to move ahead without Canada, with a bilateral deal for Mexico. President can't actually do that though, folks. Congress needs to pass this new NAFTA. So there's going to be some argy-bargy around that. But interesting also, President Trump had a pop at China about that Des Moines Register 4-page the other day. Anyway, where are we now? We've got dollar yen at 112.65. It's down a bit, well off the highs, at the range highs, on the basis of stocks turning around, I think. Gold lost about 0.5%. It's about 11.94. Bitcoin's down, up, sorry. It was up 1.75 at one point. Now it's down 1. It's in this kind of 62 to 67 kind of range, 6,700 range at the moment. So let's dive straight into the charts, and I'll start with the Fed. So here's the dot plots. This is a really cool chart from Bloomberg. And what you get is the size of the dot tells you how many participants. So, you know, when you normally look at the dot, it's across there. What Bloomy has done has made it the size. And you can see that December's a lock unless the economy tanks, unexpectedly, of course, because there's now 16 people. 16 of the members of the board, FOMC I should say, who think that there's going to be another hike. That's really important. Longer term though, you can see that there's some subtle, very, very subtle shifts, and particularly in 2020. There's not a big change in 2019, maybe one or two folks, but 2020 they are a bit more increases. But the long run is only a very subtle uplift. So what does that tell you? Ray Dalio, apparently, I haven't read it, but I've seen the tweet, says that, or a tweet talking about it, says that the US will be in recession in a couple of years. The Fed does not reflect this. Their projections do not reflect this. Yes, the economy slows down, so the current run rate drops to, I think it's 1.8 is the median in 3 years' time, and that's about the long run average, pardon me, that they're expecting. But overall, they're quite sanguine, and I think the Fed's right. I think this is going to be like Australia. I think that the US economy is going to keep on keeping on. It'll slow down, but it'll keep on keeping on in a manner that the Australian economy has too. You can't underrate the importance of service economy in keeping things going. Anyway, let's dive into the charts. What's that? 4 minutes and 28 seconds for an intro. Let's do Euro first. Now, this is the value of medium-term to long-term looking at charts. If I had been looking at a 15 or a 1 hour chart, would have got completely spooked by that move. And if you were just looking at the 4 hour charts, you know, the emotions that I was feeling as someone who'd been up since 3:30 this morning, so just before the Fed announcement. I'm looking at my charts, and you're thinking, heck, how far's Euro going to go? Oh, I'm so wrong. It's a dovish Fed, blah, blah, blah. But I have got no idea how many Fed statements and press conferences I've been through. But I'm sitting there thinking, this doesn't read right to me. We'll see what Jay Powell says. And then, of course, we see what happened. But the key thing here is that when you look at the daily charts, we couldn't even break 3 or 4 days ago's peak, let alone this range top at 118.15. That's really important. Or 50, I should say. So 118.50, 116.75, they're the parameters. Could we go higher? Of course we could. We're just looking at charts here. But the Euro did not do that last night, so that is a warning. The data next week is going to be key. Right? The Fed has said that they are data dependent. Jerome Powell, I should say, has said the Fed is data dependent. So we have to be too. So we'll go with that. But as you can see here, it's setting up for at least a test of 116.75 to 117. And if it breaks, we'll see where it goes. I do tend to favour a downside bias. I better get my skates on because I'm already 6 minutes in. Oh, that's dollar CAD. Sorry, I'll come back to dollar CAD in a moment. Don't want Bitcoin. Let's just redo this for you. Sorry, otherwise I'll get lost of exactly where all my charts are. Right, here we go. Dollar yen. Right, so dollar yen. So see, this is the range top we talked about yesterday. Again, another reason, like I have traded 5-minute charts and 15-minute charts and all that kind of stuff, but I'm not tied to my desk anymore, and so I use my longer term stuff. It's exactly the same system. You can use my system on 15-minute charts, on 1-minute charts. It works because essentially the combination of the MACDs, the Bollinger Bands, and the moving averages, it just encapsulates what's going on in that time frame. So I use it on all time frames and all markets. But as you can see here, what have we got? We've got this move up to the recent range top. Now, if it can break, then it can run. But that's not what happened overnight. It found a peak, and now it's broken the uptrend. So that does suggest some chance of downside. So if we have a look at the Fibos, we can put the Fibos on, and we can say that the garden variety retracement, and for those new viewers, garden variety retracement is just a 38.2% retracement. It doesn't say that a trend has ended. It just says it's time for a pause. We go back there. So 112. 112.07 is probably a level I'd target, and you can see here it was roughly a peak, bit of a bottom. So that's the level that I'd be looking for, unless or until that 113 odd gets taken out. So on a risk reward trade, it's only 50-50, but still, if you look at my normal setup, that would be what I'd suggest. Sterling also had a bit of a wild one. If you have a look at the hourly chart there, that's an indecisive day for sterling. So what I would say when I look at that chart for sterling, there's lots of Brexit news. Michel Barnier, the EU negotiator, has told his bosses that he's not sure that he can keep to the timeline he promised because of what's going on in Britain. It's getting very messy on the British side. I'm 55-45 for hard Brexit, and we'll see over the next week or two whether that becomes a sort of a 60-40 kind of move. But a break either side of that would get me moving on sterling. In terms of the battler, let's look at this on the dailies. So what you can see is that we've had 1, we've had 2, we've had 3, and we've had 4. You could probably call that a test. You could probably call that a test too. But so that's a false break there yesterday or last night morning, I should say. Look at that. That's the hourly. It turns the outlook. It doesn't mean a collapse. 72.30 is the key on the 4 hours for me. If it breaks down through there, then the Aussie goes lower. Certainly if it takes out 72, then I'll be looking for a run into the 70s. So we'll see what happens there. Dollar CAD, as I say, breaking higher. It's getting fractious, if that's a word. I love that word. It's getting fractious between the US and the Canadians over NAFTA. Dollar CAD has really ripped in the last little while. It's off in the last hour, or off its peak, I should say. But you can see here. So what have we had? Let's just think about this, abstracting the NAFTA news. We've got a double bottom. We've had a move all the way down to here. It's rejected at 131, so that's a 61.8. We've now found support at the bottom, and we've broken a trend line. So in the short term, that suggests dollar CAD is going to go higher. So that bar there is last night, as at till 7 o'clock this morning. This bar here is since 7 o'clock, and I'm recording this at 8:43. So in the last hour and a half or so, it has continued, dollar CAD that is, it has continued to rally. It's off just about 10 points in the last few minutes though. So keep an eye on that. That looks like it's trying to break higher substantially. So Kiwi. So the RBNZ was the other central bank that had a meeting last night, and it kept rates at 175. It poo-pooed the recent spike in GDP, saying it still thinks that there are headwinds and that the outlook is negative. And what we've got is we've got this zone between 66.90 and 66.20. It's actually 66.89 and 67.14. So that bottom over here, that peak here, and this peak, or this level here, which is a 23.6. But I've only just drawn that in this morning. Previously, I had it drawn to 66.89, and it was the previous lows. So this is a really important level, that 67.14 level. So let's call it 20, give it 6 points. If it can get up and through 67.20, then it runs. Maybe to 68.5, which has been superb resistance. But that was a dovish RBNZ. But I think what we're going to see now, Governor Kuroda, the Bank of England, and the Fed and the ECB have all said, plus the BIS, have all said the time for these emergency rates is over. All right. So the RBNZ and the RBA will at some point probably move to join them. If the market gets a hint of that, then Kiwi roars, Aussie roars, that kind of thing. At the moment, that's not happening. But the Australian Citibank Economic Surprise Index is only second to the Canadian dollar. But what that tells you is that this US dollar is denominating. These worries about NAFTA are denominating, and worries about the Kiwi growth rate will dominate. I think I said denominating. Dominate unless or until we get a hint that the RBNZ might change. A break of 67.20 would be key. But for me, if we take out last night's low at 66.34, we're at 66.61. Kiwi goes lower. Commodities, gold. Trying to break out. Let's blow that up so you can get a better look. Trying to break out. If it takes out last night's low, which is 11.90, so give it 50 cents. 11.90.50. If it goes down below 11.90, then it goes another probably $8, maybe even further. Copper last night, indecisive. Not a lot going on with the copper market just at the moment. We've had the big move higher on the back of maybe this trade tension's not so bad. We've had the reaction at 286.5, the previous range high. Now we're consolidating. Does copper come back further? I'd suggest it probably does. Or does it bust 286.5 and go for a red hot go? As I said yesterday, Macquarie Bank and other investment banks believe it goes higher, but you really got to take out 2 days ago now the low of 278.80 to get me bothered on the downside, and of course 286.50 on the upside would get things moving. WTI and Brent were under pressure. I'll blow that up for you. WTI and Brent were under pressure. The EIA showed that crude built more than expected and gasoline built more than expected. So we had this little bit of a dip. It came back in the last few hours post-FOMC when it became apparent, or at least we saw on Twitter, that the US government does not wish to further access the SPR, Strategic Petroleum Reserve, to drop prices. So it did recover off the lows. 71.20 and particularly 71 are the key for me. If you remember, well, I had a week off, didn't I? So top side I was riding 71.20 to 71.50. If it breaks, then it runs. We've seen the break, we've seen the run. It's now come back and it's tested. 71.30 something was the low last night. If it gets down through 71.20, that opens up the bottom side. If it gets down through 71, certainly it does. 69.83. So you get down through 71, you could get $1.20, maybe even more, potentially even down to this multitude of support at 69.20. But we'll wait and see. In terms of Brent, similar kind of story, except it hasn't retraced all the way back to the break. That level, which I wouldn't rule out, is 79.69. But don't forget, we've seen this in oil many times. You know, it ratchets up to a level, it breaks through, it comes back, it tests, it sits, and then it runs. But equally, on many markets, when they break those levels or they break the trend line. So just keep an eye on that. In terms of stocks, I better get the skates on. So not bearish yet, but an ugly candle and a ugly series of days for the S&P. A break of this level, which is this is futures, so not physical. Don't forget, folks. 29.09. If it gets down through 29.09, then it can run to 28.68. So could go 40 points or so. The Aussie market is struggling. This is the 4-hour chart here. It needs to hold 61.53, let alone 61.45. I see 61.25 coming into the frame now over here, but it's got to take out last night's low. If you have a look at it on the dailies, you can hardly see it, but that 61.53 to last night's low at 56. So that 53-56 region is going to be important support and a level to watch tonight. Obviously, the CAC was up, was the strongest in EU trade, but the DAX, physical DAX closed higher as well. But we've got this move here. You can see this consolidation zone, this 12,300 level. Let's round it down 10 points. If it breaks down through 12,300, then you would say that the top of the trend channel has been respected again, and further losses could be in train. The stochastics are certainly in the overbought territory, but I'd want to see the MACD turn as well to confirm that, or at least to generate a sell signal for me. So I'm probably a day away in terms of the DAX. Bitcoin, last but not least, still really not going anywhere. You could draw a little trend line in there. And this is one of those times where you've got that one and then you've got that one as well. It's in a wedge looking to break out. So, not a lot for me in that one at the moment. The percentage moves are big, but my risk tolerance is less than that. Anyway, 16, almost 17 minutes. That'll probably do. Have a great day, traders. Good luck. Plenty of setups out there. We could be seeing the turn of the turn, if that makes any sense. We've had one leg higher for the US dollar. We've had one leg lower, which is the all you bulls were idiots. The next week's going to be really important to resolve where indeed this US dollar is going. My sense is it's higher, but the data's going to tell us. Catch you tomorrow. Bye for now.